Welcome to Volume Gaps. This is going to be the last indicator you ever have to purchase to be a successful and consistent and profitable trader. Let's get into it. Now, here's why this is probably going to be the last indicator that you have to purchase, the last trading coaching that you'll ever have to purchase. We are not using things that are made up. We're not using setups and multiple candles. We're not using different candle types. We're not going to be using different indicators. We're not going to be using constellation of stars or any sort of made up based on this time we should do this strategy ever. Okay, we are using simply volume and transactions to find where price is unwilling to go, placing our orders at those spots and letting price bounce back to where it came from and capturing the profit repeatedly every single day. That's all we're doing. This strategy will work forever because it's not a trading strategy. It is simply an economic strategy. Okay, so let me break this down for you. Let's use something that's not related to trading so that this makes sense. Let's use the monitor that I'm looking at. It's a Dell monitor. Okay, it's nice, I guess. It's not maybe the best ever, but it's not the worst either. It's somewhere in the middle. All right, it was like 600 bucks to buy. Let's use that. If Dell sold this monitor for 100 bucks, okay, if they sold it for $100, well, it might sell out. It probably would sell out instantly because it's like really cheap. Like this thing is worth 600 bucks. So if it drops down to $100, there's going to be it's going to be met with a ton of buyer demand. Like, yeah, like hell yeah, I'll take this monitor for 100 bucks if it was worth 600 bucks. Like, of course, any day of the week, right? Now let's say they raise the price to $6,000. Well, I can tell you for a fact that I wouldn't have bought this monitor for $6,000. Nobody would, right? It's not worth that. Okay, so if the price of this monitor gets up here, well, there aren't going to be any buyers, only going to be sellers, right? So price will have to come back down because there are no willing takers at this price. This is just economics 101. So the monitor might go down to $550. Okay, there's a lot of buying there. The monitor might go up to $750. Okay, there's not as much buying. There's maybe a little bit more people not looking to purchase at this price. So we're trying to find this middle ground, right? But every time price goes a little too high, there aren't as many buyers. So that means that in trading case, there'd be sellers, but in this case, in the business case, there'd be less buying, meaning you'd be losing money making more items, more units of this computer. So then, like, you'd go like this. You'd have way less buying. Your buying volume goes like this, so that means you have to bring price down. Now, you bring price down too far, or you bring it down to hopefully get more sales, but you bring it too far, you don't make as much money, and you sell a ton of units. So then you have to go and move price back up. And so it's this ever-gazing back and forth, back and forth. This is how the markets move about 80% of the time, which is trying to figure out, like, what's this thing worth on the upside? What's it worth on the downside? But then quickly reverting back to where it came from. It's no different than economics. You could use this example for a car. You could use this example for a house. Think about houses. If it's a house that's worth $750,000 and it's sold for $1 million, there might not be very many takers. But if that same $750,000 house is sold for $450,000, we're going to be a shitload of offers on that house. Okay, that's how it works. And so you want to find kind of the right price. And so all we're banking on is that price isn't going to make a brand new high or a brand new low, but in fact, stay within this range. That is how this works. It's economic theory 101. And we'll talk about how the components of this match up. But this is how price moves, and so this is how you're going to trade. Now, when most people think about volume, they measure it on a per candle basis. They measure it vertically, essentially, which is, okay, I see this candle right here and this candle right here has a lot of volume because my volume indicator down here, right, shows that it's above the average. I've got a lot of volume right here. Okay, or if there's low volume, you look at the average and say, okay, these candles have pretty low volume in comparison to maybe over here. Right? And maybe there's some more absolutes you can use as well, but like high volume down here, lower volume in here, big spike, some higher volume, and then low volume. Nothing wrong with looking at volume on a vertical scale, but it doesn't give you a big picture because if you try to compare these candles, you're not going to get a ton of data out of that. Right? There's not a whole lot that you can use from these candles here that could replicate on a different candle. Like for example, this big candle right here. I don't know how we could really use and look at and say, okay, this volume was up here, so this volume is here. Like, what are we gonna do with that? Measuring volume on a vertical scale, all it really does is show us big candles, right? If the candle's big, it has high volume, which is fantastic, but it doesn't do anything for us. That's why we use volume gaps. We're gonna measure volume, not vertically, but horizontally, okay? And you may have seen something like this before, which is the volume profile, which is exactly what volume gaps is. We are going to use the volume profile to find the perfect spots to enter our trades. Now, you've heard of the volume profile before, but maybe you don't know what to do with it or how to do anything with it. And so what the volume profile does is instead of measuring price vertically or measuring it by time, so like this candle had this much volume and this candle had that much volume, the volume profile turns on its side and says, hey, trades were taken at this level, this level, this level, this level, and this level. And then where there are more trades, these nodes extend out, okay? And then where there are the most trades taken is the point of control, this red line. Now I take this off because I really don't want to see it, and the way you do that is by going to inputs, POC color, point of control, just turn it down to 0. So I don't want to see that. I can see the highest node very clearly, right? And you've probably seen the volume profile look something more like, let me do this here, that, and then, yeah, there we go. You've probably seen a much larger volume profile before. And this is great, but it doesn't give us anything that we can really use. It's really measuring like too much space, right? And is this, no, okay, I was gonna say. So this isn't super useful to us because we can't find pinpoint entries using this big of a volume profile. So what I had to do was build a volume profile that essentially is built for scalpers. And that's what we got. And that's how we are going to use volume gaps. We're going to focus on a smaller set of candles that can give us sniper entries that are good for 3, 5, 10, 15, 20 points at a time. So there are a few aspects to the volume profile. We looked at the point of control. That is basically where the most transactions have occurred. It's very similar to VWAP, but instead of measuring basically the entire day, or measuring it by volume and by price, it's just measuring by where lines are on the chart. So VWAP is another sort of point of control kind of. It's essentially measuring like the average purchase price of the day weighted by volume. The point of control is the same thing. So the highest node is always going to be where the most trades are taken. So if you put a line through the middle of your highest node here, then you're going to have essentially where most candles touch is another way of putting it, but where most trades are being taken, which means there's a ton of volume there, which means there's a ton of agreement at this price. The point of control can act like a support and resistance level. So if price does push down to the point of control, it could bounce, or if price is below, it could rise up to it, similar to VWAP. Okay. Now, because we're using a custom built volume profile, our point of control isn't going to be as precise because we're only going to be measuring about the 50 most candles or so. So keep that in mind, but the point of control can be a very strong point of support or resistance, very similar to how VWAP acts. Now, you also have some candles over here, and we'll talk about the lines second or lastly, but you also have some candles here, or nodes rather, that are darker and that are lighter. The lighter ones are what are called the value area. And this is where most of the trades have been taken, okay? So a value area essentially is like, hey, this is the chunk, and I have a specific number, and we'll talk about the settings in the next part here, but I have a specific chunk of like, hey, most of the trades are taken in this range. So specifically for this, it's about a 10-point range over the past 50 candles. Most of the trades have been taken in here. Yes, price popped out, it returned. Yes, price popped out, it returned. But most trades have been taken in this spot. Fantastic. Now the lower nodes, and I have a very specific setting for this because it's worked out for me in a ton of the trades that I've been taking, and we'll talk through that, and you guys will see me do it live and all the examples I give as well. But the lower volume nodes, these are important. So right outside the value area, these nodes are higher, right? This level here, and I'm not sure if you guys can really see this little box right here. These are higher than where the lines are, but they have less volume. And so these nodes in here can also act as tremendous spots of support and resistance where we could potentially go short. As an example, it's kind of working out for me right now that at the top of this node right there, going short, so we had to deal with about 3 points of drawdown, going short would have been a really, really nice trade here to catch 2 to 3 points. That'd have been a super solid trade. If you went short up here, you'd have made way more. That'd have been a nice little 4 to 5 point trade because the ATR isn't super high right now. So that'd have been a really cool trade as well. But using the lower nodes, we can look for these points to also be entry spots for us as well. Now, they're a little less reliable because there's still a lot more volume than maybe up here at these red lines. But sometimes you're gonna have a market where it's choppy like this and price hasn't really moved a ton. And it's gonna be a while before price gets up here. And it's gonna be a long time before price gets down here as well, like obviously. And so there are going to be some lower nodes that aren't in the value area that are above your red lines, or I guess below your red lines and above your green lines, that could be good spots for you to go long or go short off of. All right, so you have 3 components. You have the point of control, which is going to be the largest node of the value area. Okay, that's one. You have the value area, which is basically where most transactions have been taken. And again, I'll cover how my volume area looks because if you put this on your chart at first, your volume area is going to be a lot larger. And I don't necessarily want that for a specific reason. And then you have like the third part, I guess there are four parts. The third part are the lower volume nodes that are outside of your value area, but aren't your lowest volume gaps. Okay, and so what we're looking for essentially is how to use this data to find really good spots. So maybe I do want to go short here. Prices tried to break this thing once, twice, three times, and then here's kind of the fourth attempt. We'll see kind of what happens here. But we have essentially price reversing back off of this level here, and we'll kind of watch this candle and see what it does. But we can use some of these lower volume nodes to find really good spots. It looks like this thing kind of popped up for us. So it ran a point and it just ran down 3. So that would be a very successful trade using trading on Tradevate. You'd be able to slide your stop there and really catch a monster. And there it is, boom. Like this is how it works, okay? So these are the components of the volume gaps, which is just a volume profile built for scalpers. Now the VGAPS indicator is incredibly powerful because the volume profile is incredibly powerful, but here's when you don't want to use this type of strategy is when price is flowy like this, okay? So when price makes these lows like this, it's all like same color, 1, 2, 3, 4, 5, 6, 7 in a row, and then 1, 2, 3, 4, 5, 6 candles in a row. We don't necessarily want to try and step in front of any of these moves, okay? And we have strong just like encouragement from price that we're probably worth more than this, probably not worth as much here. We want to wait for price to really settle down and start making some wick highs and wick lows that we can then use as a way to try and find where we need to be entering our trades. For example, trying to go like short right here would have been a fool's errand the next time price got there because price just ran. And trying to go short on any of these levels, and we're inside the value area, so we don't want to be taking trades inside of there anyway, like we know that. But trying to take trades on movement like this is going to be very difficult. You will have success catching a few points, but you're not going to get a type of trade that it runs up, touches, and like sprints back down. That's just not going to happen while price is like this. What we want to do is wait for price to really settle down and sit inside of the value area. Now, if you're used to trading breakouts and used to trading momentum like this is gonna kill you. It's gonna be very hard to do this. But we have to understand that like this is what we're doing, okay, is not trying to catch breakouts because this doesn't happen all that often, okay? Like this type of movement doesn't happen all this often. It happens for, what's my price measure? For 8 minutes here, okay? And it's happening for another, let's just call that, there's 6 bars, and then here we go, here's our ending right there, 12 bars, okay. So 20 bars in a time span of, I'll count that green one to start, in a time span of 106 bars. So like a true 20%, right? 20 candles that move flowy within this region. So this isn't gonna happen for all that long, okay? Take a break, 5-10 minutes, you'll be back up, time to trade. Now, okay, so now we have price, it's starting to make some sense here. Now price is starting to settle down. I don't love taking a short right here, but I probably would place a half size entry. So I'd probably go 1 candle right there, or one mini right here, and just see what happens. I'd probably go light on my trade size here. But like now, okay, price rejected this area twice. Like it went up here, ran back, went up here, ran back. Okay, I can probably go ahead and place a trade somewhere in here and go sell. Now, I'd be stepping in front of an upward moving move, right? And the market's up for today. So that would be something to keep an eye on. But I'd be okay taking a trade here. I've seen price kind of reject twice now. And let's just see what this candle does. Let's put our entry right there. And let's just see, did we get a touch? We did. And we'll kind of just have to wait to see what this candle does. But that's a point, I guess, of movement. And we'll see if it can give us anything else. And you will notice that the volume nodes move because there are transactions being taken at these levels now, okay? So this is going to move throughout the trade. Don't like be upset or afraid about that. Just know that it's going to happen because this thing is tracking transactions. So these nodes are going to move up and down based on where prices has been transacting in the recent time. So there's our little move. There's 3 points. Nice. Okay, we probably could wrestle with that and be okay. Considering the ATR is sitting at 9, so that's a third of the ATR. That's a pretty good move. All right, that trade would have worked out for us pretty good, and depending on what your trade type is, maybe you continue to stay in this bad boy. I'm not sure. Now, here's a simple strategy that will help you save money and then help you make more money. Is when you have a huge candle like this, a big, massive move up, and it could be anywhere. It could be even a massive move down. You don't want to play with this candle. Like, we don't want to play with this, meaning we don't want to go short off of this, and we don't really want to go long off of this either. Like, this candle we need to almost consider as irrelevant, and we need to find a new level to trade from. So this candle, I'm gonna take this one out. I'm using this red candle now. Okay, so that's a point where maybe price could pull back for us, like, all right, but I'd be, cautious because price is kind of rampaging right now. But then I've got this candle here, my value area is here. I would probably be looking for a spot to go long somewhere in here. So I would let price kind of dance around and then maybe we'd get there. And I'm in bar replay mode. I didn't mean to be. Let's just see what happens. I'm gonna hit play. It'll go really fast. Oh, there we go. All right, so price hits my level and then it goes. I promise you I did not mean to mark that out. I just went backwards for a different recording. Anyway, so price hits that level, boom, and it runs because we had a lower volume amount at that level. So that's ideal. Okay, but when we get these big candles, we don't want to play with them because we don't know what could happen next. For example, this candle's a big one. Don't want to play with it. Don't want to go sell at this level. That would be tricky. Don't want to go sell here. That would be tricky. Like we keep getting these levels, and maybe you could go sell right here. It would just be super ballsy. But price runs, big candle. We don't want to play with this one. But then it rejects here. Interesting. Okay. Then it goes down here. Interesting. Okay, so you could probably go long at this spot right here. We touch one touch, and I have to see what the volume profile was looking like at that time. Let's go bar play mode right here. Let's see. We're not in value area, but we are in a higher volume node though. Not as high as these, but pretty close. So this would not be a great place to take a trade from. So let's just click one ahead for a second. Okay. All right, so price is trading right here. Okay, so now I kind of have this spot up here as a good place to sell. Let's move my entry right here. And I actually did take this trade at 9:00. This is a 9:04 trade, so the next candle is going to be the one I take a trade on. Put my sell right here, and I've seen once, twice, and kind of this third time here, price has tried to make a break, and it just hasn't gotten above this level. So I'm pretty convicted now. I'm not trading off of this candle. My evidence is this candle and then somewhat of this candle, but my entry is a little cautious because it's basically at the top of this one. But I'm kind of certain that price might be done moving up. Maybe we can move down. Next candle. So price goes up here, touches my entry. I guess my entry would have been a little bit lower. Touches my entry and it pulls back. That was a really good trade for me. I ended up making 600 bucks on, sorry, not this candle. I apologize. It's at 9:05. This candle right here. So price touches my entry, then it rolls back down. $600 trade on this one. And I was like, that doesn't make any sense. Price hits this high. It goes a little higher, 4 points, I think that was. Yeah, 3 points. And then it rolls back down. We end up catching most of that candle and taking a nice chunk of profit. I'll try and make more and more examples of this, but what we can see is the value area is right here. So let me just draw it out so that it's extended all the way and then there's no confusion here. All right, so white line there, white line there. Okay, now we have the volume gaps basically where there are very light volume up here and then way down here. However, what we're seeing are a ton of wicks right here, okay? A lot of wicks up here as well. And the volume outside of the value area really decreases, especially up here in this, right now it's 582-ish area. And then down here, kind of the 559, 560 area. I would be okay putting a purchase order in somewhere down here at this 561. So let me just move this line right here. I'd be okay going long off of this. I've got a ton of volume here, and what we know about the volume profile and how price moves is price is going to get attracted back to the value area, right? It's rather said differently, price is going to go back to where it's comfortable, where we all agree. Everyone agrees that price is worth something around, at least NQ futures right now, is worth something between 22,579 and 22,562, right? Like within 17 points, we think that this is what the NASDAQ futures are worth at this specific moment. So I would be okay taking a long trade, betting price isn't going to break down lower, or a short trade up here at this 580-ish level. I'd be okay taking a trade there and basically banking on the fact that most traders are going to see price the same way I'm seeing it, which is we're just kind of sitting in this region. Let's short up here and let's go long down here, but we don't need to wait for price to get all the way down here because we're likely not going to get it. I've seen price hit this level. I didn't grab my thing. Hit this level, and then we broke past it for a point, in a quarter, a point and a half, and then roll back up strongly, right? So both of these would be great spots to go long off of. And then if price were to take just a big swoon down, right, and we did, like maybe we caught a trade, it pushed back up, then it pulled back down again, then we can start to entertain something down here. But we don't need to wait this long. The value area is very, I think, defined and clear. And so this is really the best time to be trading. Unfortunately, you don't get a lot of movement from price, but you do get a lot of consistency. So when price is flat like this, fantastic time for us to maybe take some shorts up in here, and then take some longs, maybe down in here as well. Okay, so when the value area is clear and defined and price has kind of chopped in the same area, that's a wonderful time for us to look at using some of these lower volume nodes that aren't the lowest, but they are lower volume nodes outside of the value area that could give us some really good positions. Now, I will do my best to document more trades that I take, different trade setups, different trade types, using the volume gaps indicator and only using the volume gaps indicator, okay? I want to trade based off volumes and transactions, and that's what we're going to do. So I'll do my best to clip those up and make sure they get posted somewhere so that you can watch them. If you can, join the live stream, that'd be fantastic. If you can't, try and catch the replay a little bit. And if you can't catch that, then again, I'll have some clips in there that you can just watch. But take your shot with this. Like, take multiple trades with it, get comfortable with it, because you're going to have like the rationale and the reasoning as to why price is reversing. And it's only going to take you a couple days to get comfortable with it. And I can almost guarantee that it's going to help you become more consistent. And your win rate should be in like the mid to high 70s and into the 80s, because we're trading reversals and price typically reverses. We are aligned with the way the market moves, trading the same way the market moves, okay? So I will see you guys inside. Be active, be courageous, but be encouraging to others, right? And help each other out. And if I can, we'll put together more coaching opportunities so that we can all get better at the same time. I'll see you inside. Thanks for joining. Let's get to it.